I posted this thread a few days ago on how Hims could easily double in 2025. It got a lot of attention on X, over 1100 likes. A lot of you guys enjoyed it, so I decided to talk about it on YouTube and explain how this could easily be achievable this year. And if you guys notice, whenever I do my videos on YouTube or on X, I mainly focus on doubles every 5 years. And the reason I do that is I analyze stocks using the worst case scenario. And when I look at a stock like SoFi a few days ago, I got a lot of pushback on only a 2x in 5 years. SoFi should go up 5 or 6 times. And it could easily go up 5 or 6 times. But I try to analyze them on the worst case scenario, where if I can at least double my money in 5 years or get a 15% CAGR, which is double the 8% long-term return of the S&P, then to me that would be worth my time. And I would have a very hard time overpaying. But the second reason why I look for those doubles in 5 years is because I don't like to hype up stocks too much and make those titles about this stock will make you a millionaire and this stock will go up 100 times, because all those kind of titles, they all disappear whenever we have some kind of a market crash. All those titles disappeared in 2022, and a lot of those stocks went down 80% and never recovered. So I like to talk about the overall case and be a little bit more conservative, but I'm gonna give you a very clear case on how I could easily see Hims doubling in 2025. I have 7% of my portfolio in the stock. I'm going to talk about it again and also give you my long-term view on the company. So I really hope you enjoy it. And I'm very happy that a lot more YouTubers have been talking about the stock. A very popular one recently talked about it. He's been buying the stock. He did a very good video on it. I encourage you to watch the video. And he talked about, getting a lot of hate for the company. And, that's something I've been dealing with for 2 years. This is what happens with Hims. Whenever it goes down, and it has pretty big drawdowns, like it goes down 50%, all the haters come in. It goes up 200%, they all disappear. Then it goes down 34%, 129%. Then it goes down 47%. The last rally in just a few months, in 2 months, Hims went up 154%. Now it's down 30% from all-time high, and it's going up again. But I'm seeing a catalyst. I'm seeing something that could potentially change this trend, where the stock could just take off like Palantir and Tesla and Nvidia. And maybe it's not going to be going back down anytime soon. I'm seeing a clear catalyst, and that's what I'm going to share in the video. But a lot of you guys know Hims and Hers Health. They recently got famous for selling their discounted GLP-1 kind of product for $165 a month right now, versus, a lot of the Ozempic stuff, they sell them for $2,000 or $3,000 a month or something crazy. And, they provide a lot of the healthcare alternative to people at a very low price, compared to the traditional big pharma companies. There are a lot of people they just cannot afford. Things like hair loss, they send you a hairspray or certain pills, and a lot of people found amazing results, very good reviews on the company. Things with acne, sexual health, 80 million people in the United States. Dermatology is 80 million people, TAM, in the US. Mental health, 100 million people. This is huge. And the company is big in mental health. Weight loss very recently with GLP-1. But it's not just GLP-1. They also have those pills where they help you, not to eat too much. And it's only $79 a month. And this is where most of their growth has been coming in. And it's been very good with the company. And they've been doing very well in this case. And it's not just a weight loss story. It's mainly hair loss and just telehealth in general. And it's been amazing. Revenue growth, amazing stuff, up 77% year on year. Subscribers up 44% year on year. Over 2 million subscribers right now. Subscribers have been rapidly growing, and the growth is not going down anytime soon. It's actually going up. The growth went from 77% year on year to the guidance for Q4 of 2024. It's going to be 89 to 91% year on year. So the growth isn't going down. It's actually going up. It's actually increasing. And this is something you don't really find with a lot of companies. And this is Hims and Hers Health. This is an amazing tailwind, mega trend that's is disrupting the traditional healthcare space, where all those big pharmaceutical companies were charging terrible prices, and people go to in-person clinics for mental health and hair loss. Now they just order it for $50 or $100 a month, some spray from Hims and Hers. It comes to their house, they talk with the doctor on their phones, they don't have to go in person, and it's been doing very well. And the TAM is huge, over 100 million people in each category. And it's been going very well. The company is profitable, net income GAAP basis on non-GAAP and on GAAP basis. Now, the latest quarter wasn't 75 million in net income because they had 60 million in a one-time tax benefit. So taking out the tax benefit, it would have been around 15 million, which is up from 13 million the quarter, 11 million the one before, and 1.2 million the one before that. So it's been getting better. And the company isn't really focused on being profitable, and it shouldn't be. It should mainly be focused on growing and establishing a good reputation when it's in early stages of the business cycle. That's just what I believe. Now, the main argument I made in this thread or in this tweet, you could say, is that Hims is dirt cheap at 2.6 times sales, growing 91%, or 28 PE, growing 250%. Now, Hims is up a little bit since this post, so some of those metrics have changed. Hims isn't trading at 2.6 times sales, or it's trading at 2.9 times sales. So it went up a little bit. It's not trading at 28 times forward earnings. It's trading at 31 times forward earnings. It's still cheap, but it's not as cheap as it was a few days ago. And the stock is volatile. And especially when you compare it to other growth stocks in the market. This is the main pushback I got. Now, if you look at SoFi, for example, SoFi is trading at 5.7 times sales, growing sales 17%. Palantir is trading at 52 times sales, growing sales 23%. And some of those companies are growing earnings per share 50, 100%. But none of them are growing earnings per share 250% or are growing sales 91%. And I don't believe a lot of them have the kind of tailwinds that Hims actually has within the overall company. Now, why is Hims trading at such a discount? And I know a lot of you will say, yeah, but you cannot compare SoFi to Hims, and that's a bank, and that's telehealth. I'm just comparing it to what the market is putting in terms of multiples. So if the market is willing to price growth stocks at some kind of a premium right now, why is Hims trading at such a discount? And what will cause that to change? I'm going to tell you why it's trading at a discount and what will cause it to change. The main reason why Hims has been trading at a discount is because of the GLP-1 compounded product that they sell. Hims has recently gained popularity for selling their discounted compounded GLP-1 injection, but it's not FDA approved. Now, the only way they can sell it if it's not FDA approved is because there's a semaglutide, or however you pronounce it. It's on a shortage list of the FDA. And the FDA, they meet every single month and they determine if this kind of compounded version is still on a shortage list or not. As long as it's on a shortage list, Hims is allowed to sell this compounded version. Okay, once it's no longer on a shortage list, Hims will no longer be able to sell the weight loss GLP-1 injections. And this is what's been happening, and a lot of people are fearful of that. And this is why Hims has been trading at a discount, because of the uncertainty of what will the growth or how will the growth look like once they no longer be able to sell the GLP-1 stuff. Most people believe that Hims is all about GLP-1, and if GLP-1 is gone, then the entire story of Hims is gone. But I did tell you, and I showed you many times, that Hims is much more than just a story of GLP-1. They're very big in dermatology and hair loss, mental health, very big in that stuff. And their most popular one isn't the GLP-1, $165 subscription, but it's mainly the $79 pills subscription. And people have mentioned of losing 1 to 15 pounds in the first 1 to 2 months. And that's much cheaper, and this is what's popular. And they can keep selling this one, even though, the kind of semaglutide or whatever you call it is no longer on the shortage list, And this is why Hims stock has been behaving the way it has been behaving. That's why the stock, every time it goes up, it sells off 47%, it's sold off 30%, and it sold off 34% before that. That's why it keeps selling off. That's why it's trading at a discount, because every time, the stock goes up, you have the traders and institutional investors, they're fearful that maybe this month, the FDA is gonna take this compounded version off the shortage list, and then Hims is gonna crash, or Hims the growth will plummet. So they sell the stock in anticipation. And then the news comes out and this compounded version is still on a shortage list, and then Hims rallies again. And then here comes, we're getting close to like January 20 or December 20 or whatever it was before. And then the stock starts selling off in anticipation. Then the news comes in that it's still on a shortage list. Then HIMS goes up again. And that's why HIMS is trading at such of a discount at 2 times sales versus, stocks like Palantir and stocks like SoFi, Snow, and all these companies, and SoundHound.ai, and many of those companies that HIMS is growing as much as them, if not more, with much longer runways, in my opinion, at a wide discount that's only justified because of shorter term things. Now, I have to mention some things that I'm not too sure of. Is a lot of people told me that HIMS will still be able to sell the GLP-1 stuff, even if it's no longer on a shortage list, just because it's under a personalization plan. So if they personalize it for you in some kind of an injection where it's only made for you, they can still sell it, even though it's no longer on the list. But I don't have confirmation of this stuff, and I couldn't find it on their website. A lot of people talked about this, but I couldn't find it, so I'm not going to talk about it. But if you look at HIMS, way before they started selling the GLP-1, HIMS grew 93%, 82%, 80%, 65%. That's all before the GLP-1. So if HIMS grew that fast way before GLP-1, why can't they grow 30 or 35% revenues, half what they're growing right now without GLP-1? Again, I'm not saying why not. I don't know what the percentage is of revenues for HIMS from GLP-1, but I'm just not seeing why they cannot grow 30, 35% going into the future without GLP-1. And my main thesis for how it will get a multiple expansion is this. And this is what I said. And I said, when most people are expecting something, the opposite tends to happen. Now, if you look back, for example, in 2022, most people were expecting a recession. The market is going to crash even more. That was a bear market rally. That was back in October. We bottomed and we went up, and no one was expecting it. Normally when most people are expecting something, most people are expecting a crash, the opposite tends to happen. That's what I noticed in the market. Now, a lot of people, for example, are waiting to buy HIMS because they're waiting for the FDA decision to take the GLP-1 off the list. And once they take it off the list, this is when they buy HIMS because it's going to crash 30 or 40%, and they get in on a discount, and this is when they buy the company. Now, if most people have these things in mind, and if this is why the stock is going down in anticipation of it, if it's priced in the company, I think the opposite will likely happen. And even if it's not in the short term, maybe in the longer term, I think what will potentially happen after that, HIMS will get a multiple expansion because there will be more certainty around the revenues. It will be more predictable. We won't have this event every single month that's going to decide for us how much HIMS could potentially make in the future. There won't be this reason to sell HIMS every single month just in case they take it off the shortage list. This reason will be gone. So I believe that will give HIMS a multiple expansion. If HIMS goes from where it's trading now, 2.8 times sales, it goes to 5.5 or 6 times sales, where it would still be cheaper than most growth companies in this current market. That's 100% in a year, in a few months, in my opinion. And it's easily achievable. And that's not including a lot of the sales growth that the company can experience. And that's just in the short term. And I believe a lot of it is priced in the company. If you look at the analyst estimates, they're expecting growth to go from 90% in Q4 of 2024 all the way down to 15% in Q4 of 2025. So a lot of the GLP-1 stuff is priced in the estimates, is priced in the company, which I believe, HIMS will get a multiple expansion. The opposite will happen. There will no longer be a reason to sell HIMS every single month or two in case the FDA takes it off the shortage list. There will be more predictability, more certainty, and I believe HIMS will get a multiple expansion in PE ratio from 30 times, maybe 50, 60 times, is growing EPS 250%. It will likely grow 150% for a few years, in my opinion, because they're just expanding net income margins. And the sales multiple should be 5 or 6 times minimum in the current market that we're in. Now, looking over the long term at the total US telehealth market size, in terms of the growth, it's expected to massively and rapidly grow. And that's including the GLP-1 stuff, hair loss, mental health, all that stuff is expected to be online. So telehealth in general is a massive, you could say, mega trend that a lot of people are ignoring right now. They're focused on quantum computing and all these things, but they're not focused on this market, which is now in the US alone is 62 billion and expected to go to 460 billion by 2033. Now, most of you guys would always tell me that, HIMS is just a website and Amazon's going to come in and take over and they have no moat and all these things. Well, this is what I'm pricing in. I'm pricing in Amazon, I'm pricing in no moat, and I'm pricing in all the things you guys tell me, everything you told me. And I'm just assuming that HIMS is only going to take 5% of the market share. I'm not saying 10%, which is easily achievable. I'm not saying 15%, which I believe is highly achievable. I'm just saying 5%. Okay, just 5%. That's it, 5%. Now, if HIMS was able to take 5% of this market, that's $23 billion in revenues. Okay, now I use two different valuations methods. Okay, $23 billion in revenue in 2033, in my opinion, it's highly achievable. Okay, now using 2 times sales. If I use 2 times sales multiple, which is in my opinion cheap, I told you it should be trading 5 to 6 times sales. But if I just use a 2 times sales multiple, this is a $46 billion market cap. If I divide it by the current market cap of 5.8 billion, I get 696% on the upside in HIMS from now to 2033. And in my opinion, this is the lower end. It should be trading 5 to 6 times, but that's assuming maybe it wasn't 460 billion, maybe it was 250 billion, maybe this report was wrong. Worst case scenario, I'm gonna get, in my opinion, 4 or 5x from now to 2033. Like, that's still not a bad return. So that's how I look at it. Now, another way to look at it, and that's the best way in my opinion, is they get to 23 billion or only 5% of the market. Again, that's all conservative estimates in my opinion. And they get a 10% net income margin, which is now it's like 4.2%. They should be able to easily get 10% because most of their money is spent on advertising. Gross margins are 82%. So that's easily achievable. 10% net income margin, that's $2.3 billion in net income times 30 PE. I don't believe this is unreasonable. 30 PE, this is a $69 billion market cap. Current market cap is 5.8 billion. This is 1,089% on the upside in HIMS and Hers Health from now to 2033. In the short term, I could easily see a change in sentiment, multiple expansion when there's more certainty around the stock. After the whole GLP-1 drama is over and there's no more reasons to sell HIMS every single month because something might happen at the end of the month. That's what I'm seeing in the short term. This is what I'm seeing in the long term. And I'm not trying to hype up the stock. You could do your own research. And, I started my cost basis is much lower, just being honest. It's in the $8 range. But I bought shares at 21. I bought shares at 11. I bought shares at 8. And I bought shares at 555. And I've been through it all the way. And I'm not selling a single share because I truly believe in the thesis and in what I own. And I invest in a lot of those stocks in my portfolio and in many different things. And this is the link if you're interested. So thank you very much for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.